ROST stores, ticker symbol RST, beat Q2 2026 consensus across the board today. Revenue hit $6.26 billion,
Right.
beating the $6.15 billion estimates.
Yeah.
EPS came in at a massive 2.66, which just shatters the 1.94 estimates. And full-year EPS guidance was raised to a range of 8.61 to 8.77.
And the market obviously loved it. Shares surged roughly 8% in after-hours trading, approaching $248. We've got the Q2 earnings release right in front of us for this deep dive.
Right, and our mission today is to figure out what's actually driving this massive beat for you as a retail investor. Because when you see an 8% spike after hours, you really have to look under the hood.
Exactly. I mean, the headline numbers are undeniably strong, but if we move past the initial shock of the beat, the mechanics of this quarter show a very specific dynamic at play. You really see it in their margins.
I was looking at that. They reported 610 basis points of operating margin expansion, which for a retailer,
It's huge.
it's insane. But when you dig into the notes, a massive chunk of that profitability looks like, well, kind of a one-off fluke.
Yeah, you have to separate the core business from the anomalies here. Out of that 610 basis points, 405 of them, which equates to $253 million, or 60 cents per share, that came from a one-time IEPA tariff refund.
Wait, really? Just a refund?
Yeah, basically they got a check from the government refunding money they had previously paid on imported Chinese goods.
Okay, right. So that tariff refund is basically like finding a $100 bill in an old winter coat.
Yeah, that's exactly what it is.
I mean, it feels great to have it today, but it is a dangerous metric for investors to trust because it's not a repeatable business strategy. You just can't bank on finding that $100 every quarter.
No, you really can't.
The remaining 205 basis points of core margin improvement, that's your actual salary raise, so to speak. So I have to ask, with the stock jumping 8%, are investors just getting irrational and overvaluing that one-time found money?
Well, it's a fair question, and as an investor, you should always be skeptical of one-time windfalls padding the bottom line. But if we strip out that tariff noise completely, the core business is undeniably thriving.
Yeah, comparable store sales still jumped 10%.
Right. And CEO Jim Conroy pointed out in his commentary that this wasn't just driven by price hikes. It was driven by actual customer foot traffic. Like, people are physically walking into the stores and buying.
And they're clearly betting that traffic is going to stick around. I see in the release they opened 47 new stores this quarter.
They are, yeah. And they even raised their 2026 expansion plan from 110 to 115 locations.
But wait, that brings up a glaring contradiction.
How so?
When you look at the broader macroeconomic picture, U.S. retail sales actually fell 0.6% in July. People are spending less. So how is Ross managing to completely defy a broader retail slump?
It's because they're actively absorbing the traffic that those full-price retailers are bleeding. When your budget is squeezed by inflation, you don't necessarily stop buying clothes or home goods.
You just actively seek out better value.
Exactly. Ross is capturing that trade-down effect. That structural advantage is generating serious cash flow, which, gave them the confidence to execute $319 million in share buybacks this quarter alone.
Wow. Okay, so for anyone holding this stock, the flashy headline was that government refund, but the underlying 10% jump in foot traffic is the real engine driving the long-term value here.
Precisely. But before you log off your brokerage account, here's a broader question to consider. If an off-price discount retailer like Ross Stores is seeing this kind of record-breaking foot traffic,
Right.
Is that actually a bearish signal for the broader U.S. economy? I mean, does this massive surge in bargain hunting indicate that the average consumer is feeling a much more severe financial pinch than the broader market wants to admit?
Oh, man. It definitely makes you wonder if one company's massive success is actually a warning sign for everybody else. Definitely something to mull over before the opening bell. Make sure you're following the deep dive for your daily earnings coverage.